Ladies and gentlemen, welcome to a new episode of the FinTech Hunting podcast. We have an incredible guest for you today. He's an industry thought leader, an insurance and financial services evangelist, a digital experience expert. Please help me welcome back to the show, Ross Diedrich, founder and CEO of Covered Insurance. Ross, welcome back.
Thank you for having me. It's a pleasure to be back.
Oh, well, it is great to have you. You have a wealth of knowledge and expertise, and we're here on the FinTech Hunting podcast. And a lot of people are saying, well, why are you guys talking about insurance? And what I really want to focus on is the insurance affordability crisis and how it's impacting and now becoming a mortgage problem. Talk to me about that, and let's dive right in.
Yeah. We see it across the whole industry right now, whether that's purchase, refi, servicing. Insurance has become a blocker, frankly, on origination and a sticking point on servicing. Insurance has always been coupled with a transaction, but it seems like more and more these days insurance is impeding the business rather than just being a tag-along necessity. So it's an important conversation to have.
Yeah, and I think most people, back in their head, insurance used to be just a formality, but now it's derailing deals. And people have to learn how to respond to that. So talk to me about some of the things that are derailing these deals, whether it's premiums, mid-cycle increases. Walk me through some of the things so we can kind of set the stage so everyone understands, what do you mean insurance is derailing deals?
Yeah, so there are a couple of things that we're seeing in the insurance industry in the intersection with mortgage right now. First and foremost, everybody's seen the headlines on rising premiums. If they haven't felt it already, they will. It's national, but we talk about two things with our partners in the mortgage business right now, and that's availability first and foremost, as well as affordability. And so those are the things we tend to focus on at Covered, and we see as the two primary sticking points, whether it's origination and home purchase or servicing. So I'd say on origination, we're seeing more acute pain with fallout of deals. I mean, it's hard enough right now in what's kind of a frozen market to get business, close deals. And so if you've got a deal, you better be doing everything you can to make sure you close it. In the same vein, we're also seeing a higher and higher percentage of deals fall through due to insurance. I think year over year, the percentage of deals that fell through due to insurance doubled.
Wow.
So, it went from single digit to now double digit, high teens. It's nearing 20%. I think California Association of Realtors had a really interesting report they showed that alluded to, I think it was about 14 or 15% of transactions failed to close strictly due to insurance.
Well, and as you said, deals are hard enough to come by. You can't. So let's talk about what are some of those insurance issues that are derailing that deal. Is it natural disasters? Is it weather related? Talk to me a little bit about that so people can kind of understand from that perspective.
Yeah, as hard as the housing industry is right now, have some love for your local and insurance buddies. It's a difficult business to be in right now. And particularly, agencies like Covered, we represent carriers. We don't make the rates. We don't determine the underwriting criteria. We simply represent those products. Yet we get a lot of the blowback for some of the market challenges right now. And that's okay. It's part of the job. But one of the things that we're hearing more and more from our lender partners, not only at the enterprise level, but on the LO, LOA, and team level, is the impact to DTI. So first, you kind of have the first hurdle of a purchase transaction, which is the home even insurable?
Right.
And increasingly, we're seeing carriers pull out of markets and increasing the requirements and thresholds for their underwriting criteria to make it harder to actually place coverage. So, affordability is almost an afterthought, really. It's first and foremost, can we even insure this property? And along those veins, if you can, hopefully it's affordable.
Right.
And where we really see, so it's, they're free markets. God bless America. And, capitalism prevails, and carriers will enter these markets as rates normalize. We're seeing that. We're already seeing carriers come back to states like
Good sign.
California. We've added, I think, 3 or 4 carriers to our Florida panel here in the last 60 days. So the appetite is increasing. That's positive. Now, affordability, that's another conversation. So what we're seeing now, whereas earlier this year, availability was a key conversation point. Now it's a little availability, but more affordability, and that's showing up in DTI. We have a market right now of high prices in hopefully increases in inventory helps, but we also have high mortgage rates. So it's the affordability of housing right now is a challenge in and of itself, and then higher premiums are really eroding at that DTI. And so it can be a surprise at the closing table. It doesn't have to be, but it can be.
Well, and you mentioned it doesn't have to be. So let's talk origination first, and then we'll go to servicing. But talk to me, where should insurance be discussed, and where does it fit in that mortgage life cycle or that servicing life cycle?
Yeah, let's start with origination. We have some innovative partners we've experimented with, and it doesn't need to be a surprise that insurance is $5,000 a year for a home instead of two, and that happens more than you would expect right now, and it doesn't need to be a surprise. So what we're encouraging our partners to do is to move the process earlier, the process of checking for availability and insurability much earlier in the search process, and to kind of reconfirm before final selection of a property. You may have a borrower may have 2 or 3 target properties they're most interested in, and so we're working closely with the LOs and teams right now to help them have the conversation with their borrower that it's a good check in the process before kind of finishing the offer and proceeding with a particular property, because everybody gets into rush mode and emotionally attached when that happens. So just move it earlier in the process. I think that's really the best thing to do right now. We have some really cool tools we've built around insurance estimations to help move insurance earlier in the conversation and in the process, along with different education and resources and tools, right? You don't need to be a professional in insurance as a housing professional. You just need to be partnered with one, and let them kind of introduce the concepts and help soften the blow or avoid the blow. The other thing is, it's really important right now to really run a thorough shopping process, because there are carriers out there that are willing to take risk in areas that other major carriers are not. And as I mentioned, there's always a dynamic flow of who has appetite for which regions, which risks. And so you really, right now, my advice to the mortgage professionals is to choose a partner that has a robust marketplace, who really thoroughly shops the market and knows who those carriers are, and is investing in and constantly evaluating the carrier panel they work with. And do your homework, right? There are some folks, marketplaces that tout 100, 200 carriers. Some of those are, fake clickbait representation,
Yep.
and others are auto, which is not relevant, right? So do your
Exactly.
homework. If they say they've got 100 or 200 carriers, how many do they place home insurance with? So find a partner who knows your business, move it earlier in the process, and be thorough with the shopping.
Talk to me on the servicing side, right? Got this big, huge portfolio. The term that no one wants me to bring up is lender force insurance, right? So talk to me about what can the servicers do and when should they incorporate it into their process?
Yeah, servicing is unique and a completely different set of challenges. As a lender, your goal is to close the deal and provide great service along the way. And so you need to use every arrow in your quiver. On servicing, it's a whole different set of challenges. Of course, they need to help their borrowers, but they also need to make sure they're protecting the collateral of their loans. So there's a whole different set of challenges to address in servicing. Ultimately, the punchline is it still comes down to availability and affordability.
Ability.
And so on the servicing side, we have partners who are experiencing, mid-cycle churn with insurance policies. It's creating inefficiencies in their operations teams. We're seeing
Lapses in coverage.
lapses in coverage, increases in lender-placed insurance as a last resort, even though sometimes it shouldn't be the last resort. So there's a whole slew of challenges there. But ultimately, for servicing, you just have to rethink the intersection of insurance and the servicing business. And there are moments in time and intersections where they intertwine. And the servicing business has a ton of scrutiny. It's really hard to have a high CSAT as a servicer. And so insurance can very easily be a detractor. Unfortunately, I kind of made the joke earlier, hug your insurance buddies. It's hard.
Right.
Hug your servicing buddies too, because it's really hard. And they get they're a punching bag for things that are not their problems. And insurance is one of them. And our servicing partners experience a higher and higher amount of call volume into their call centers because people think something changed with their mortgage payment. And well, yeah, the taxes go up and insurance goes up.
Right.
But they're calling saying, I thought I had a 30-year fixed mortgage. Why is my payment changing? Well, the punchline is it's because your insurance went up. And so, but most people don't look into that. Most servicers lack the education and proactive engagement around that. So as I said, as a servicer, you just need to rethink the intersection of insurance and your business model and understand the implications. And so we've worked really hard with our partners to identify the opportunities to intervene, the opportunities to turn what can be a detractor or not a friendly experience into a positive. And in the spirit of trying to achieve the elusive 80% or better mark for recapture when those days come, it's a really good thing to focus on right now with insurance because one, if you don't, we're seeing higher placements in LPI. That's a really jarring, shocking experience that can be a detractor. We're seeing
Right.
increases in delinquencies. There are whole downstream ripple of implications stemming from insurance right now. But as a servicer, you can avoid them. Find a partner that understands your business and get proactive. And there are a lot of really good downstream KPIs that'll improve. And we've seen it firsthand.
Ross, you've given so many great insights and you've mentioned partners a number of times. So talk to me about what's Covered's role in turning insurance from a friction point into a competitive advantage, whether that's on the origination or on the servicing side.
Yeah, I mentioned earlier, as a housing professional, it's your job to guide your client through the process, through the experience to close the close the deal and maximize value. As a servicer, it's your job to protect collateral and retain that business, and keep it performing. So you need to use every arrow in your quiver right now. And so the way we think about our role in this market at Covered is we're here to serve our partners and their customers. And our mission right now is to get creative and identify all of the pockets in which we can avoid or intervene in negative experiences through proactive engagements and playbooks and best practices. So on the LO side, I mentioned earlier, not only at the enterprise level with introducing the opportunity, whether it's a point of sale or otherwise, to utilize a marketplace like ours, or other kind of bespoke experiences where we're moving insurance shopping earlier into the process to check affordability and availability. Just leaning in and getting proactive with the experience, moving it earlier. I'm really proud of what the team has done with our partners on origination and servicing around education and proactive engagements. Many of our partners are exceptional at marketing, and so working with the marketing and the data and analytics teams, we've been able to deliver on both sides of the coin for origination and servicing by introducing kind of these educational campaigns, content. Borrowers don't want to think about it, insurance. They want everything done for them. There's no surprise. We all know this. So it's our role to be the best partner possible in either side of the coin with origination and servicing. And I think the proactive education is a huge piece because, again, people don't like to think about insurance. It's not the first thing on their mind.
Right.
But you do have a remarkable opportunity to be proactive, identify opportunities for potential savings, whether that's at renewal or off cycle. If you're a servicer, there are opportunities to intervene with what's happening in the market generally. People think it won't happen to me, or I live in South Dakota and our insurance shouldn't change much, or Illinois. Well, it is, and you're a part of a national pool, so it can and it will happen to you as well. So we found some certain messaging to be incredibly effective to help people understand what's happening at a national scale and more of a local scale, and also what it means for them. And by engaging like that, you soften the blow. You avoid that kind of payment shock that people want to avoid. And so there are a handful of tools and integrations and playbooks we run on either side, and it's been fun solving more problems for the industry. It hasn't been easy, but it's rewarding.
Well, and I think it's rewarding. And as a technology provider, what you're doing is you're embedding those insurance solutions, whether it's content, whether it's education, at the right touch points, instead of just a checklist at the end. And then that's where the surprises are. That's when the unaffordability, that's when the unavailability comes in. And you guys have done an incredible job as you talk about your partners, whether it's on the origination and lenders on the origination side or servicers on the servicing side. You're embedding those insurance solutions into their workflows so that they can deliver a better customer experience, a better borrower experience, and avoid a lot of these pain points. Ross, you have a wealth of knowledge and expertise. You're very passionate about this. What got you into this area, this niche of this embedded insurance, and why are you so passionate about solving these problems?
Well, I think the housing industry broadly is it's the American dream, and it's such a critical component of the economy. It's such an important thing in hierarchy of needs. People need shelter. It's an industry that will never go away. And so for us, insurance was kind of a personal experience for myself and my brother, and it doesn't need to be complicated. It doesn't need to be frustrating. It can be seamless. It can be embedded. It can be personalized. And so we really wanted to change the way insurance was bought and sold and delivered delightful experience. And um, it was just the perfect time for us to enter the market. Really, I'd say we got lucky, and I'm grateful for that. But I had no idea what we were getting into,
Right. And the
and
different pain
so
points and challenges and
yeah, and the industry has a lot of brilliant minds, and the technology adoption has been a process, but you think back to this business a decade ago, and it's night and day different than it
right.
was. So it is evolving, and we've been a part of that evolution. And so it's been kind of a privilege and an honor to contribute to making it easier to achieve the American dream. And the last 2 years, especially, have been filled with a bunch of new, I'd say since COVID, really has
Right.
been filled with a bunch of new challenges to solve for our partners and for this industry. Whether, back to the COVID time, we were running servicing campaigns and we ran into this little thing called forbearance. And, we spun up creative processes for insurance to maintain coverage there. So we just love helping demystify insurance and helping our partners turn what is kind of a necessary evil, or their perception is, into a delightful experience. So the work will never be done. There's more to do, but the team's doing a great job figuring out new and innovative ways to deliver value to our partners and borrowers across the country.
Well, Ross, you're always a wealth of knowledge and expertise. You're welcome back anytime. I know our listeners are taking copious notes and jotting down. If I'm a servicer, if I'm a lender, and I'm looking for how can I get these embedded solutions, what's the best way that they can get a hold of you and the cover team?
Yeah, we have a team traveling across the country anytime. We'd love to meet you in person. We'd love to see you at events. We're at most of them. But the best way to reach out to us is just contact me. Contact me, and Michael maybe just put my information in the notes here, and we'll get you connected with our success team. We have great programs that we can implement. Many of them are off the shelf with integrations we have today, many exclusive or unique to us that we can spin up quickly. And we also have a full success team that works kind of hand-to-hand combat in the weeds with our enterprise partners, LOs and teams and servicers to really deliver a bespoke experience that's right for their business. So we take pride in being the pros in insurance, but also being experts in our partners' businesses so we can really collaborate to deliver the right experiences, because not all budgets or resources are cut the same way across our partners, and we know that. So we've got a whole slew of playbooks and products to deliver depending on what your budget or timeline is. So get in touch with me, or Diedrich at itscovered.com. I'll get you plugged in with Dan Boss, our CRO, and our partnerships teams, and we'll solve those insurance challenges and turn the negative into a positive for you. We'd be honored to do it.
Ross, I love it. Thank you so much for being a guest on this episode of the FinTech Hunting Podcast.
Thanks, Michael.